Okay, all right. Somehow, Michael, we are both early and late at the same time. We're a day early. Not accustomed to doing this on a Monday, but we're 4 minutes late. Little technical difficulties, but I think we got it sorted out. Say hello to the people, Michael.
Hello, people.
All right, Michael's fired up today. I think our technical difficulties are solved, though. You sound good. I can hear you.
I can't hear myself. You know what I mean?
You can't hear yourself?
Normally, I have the mic in my face. I can't hear myself. This is weird.
All right, so Duncan is fired. Who else is in the house tonight? Ravi Singh, Joel Dunlap, Adam Kaufman, Chris Caslin, Andrew Gordon, and many other female viewers. It's very exciting. And I didn't want to miss the show this week, but I had a whole bunch of stuff to do tomorrow, and there was no way I'd be able to get it together. Because we're like real-life people who actually work in this industry. We're not like professional commentators. Like, we have to do things sometimes. So, but we didn't want to let you guys down, and we didn't want to miss an opportunity to talk about everything happening in the markets this week. Before we get into topic one, can I please just give a shout out to my favorite sponsor, your favorite sponsor, YCharts. YCharts' greatest sponsor in the world. You will see several charts on tonight's show, as always, and we will have used YCharts to create them. If you haven't checked out YCharts for yourself, there's a link right below me, and you can give it a shot if it's your first time at a discount because you're a What Are Your Thoughts viewer. All right, first things first. I like this thing Jason Zweig did on inflation protection in the Journal this weekend. Did you read it? I know you read everything he does.
I did.
So what are your thoughts on the main point that he's making here, which is that it's unlikely anyone is going to be able to make a big shift in their portfolio that has a material impact on whether or not they're like inflation proof or inflation hedged. I read that as like the larger of the points that he was making. What do you think about that?
I have two takeaways. So people are up in arms about inflation, how to hedge, how to protect their portfolio. And Jason said, before you overhaul your portfolio, you should bear these basic truths in mind. Fear is a good investing philosophy only for the people who sell it. And as usual, he nails it. Another big takeaway that I have from the article is that different instruments hedge different types of inflation, and you don't know which ones you're going to get. Sometimes gold works, sometimes value stocks, sometimes REITs. And then when you take the average of all historical inflation data, it turns into a Frankenstein mess because on average it doesn't matter. It matters what happens in this period. So I don't know what the best way to hedge against inflation is for this coming environment. I think probably the people that try and do their best to insulate themselves from whatever comes to pass are probably going to do more harm than good.
Okay, so there's a chart in the piece, and basically he's looking at all the asset classes, and it turns out that historically small cap value has had the high. Let me say this the right way and tell the truth. Has had the highest real returns in years with high inflation. Could that be correlated with something else that's going on economically in a year with high inflation? Or is that like an artifact of one particular period that really skews the numbers, like the 70s? Where do you think that comes from? Small cap value outperforming everything to this extent.
Well, I think that value should in an inflationary environment more so than growth stocks, because I'll tell you why. Because growth companies rely on the beliefs of investors to accept dollars further out into the future. And those earnings are worth less today if inflation is going to eat into those future dollars. Whereas value stocks typically are generating cash today, and they have other assets on the balance sheet that can insulate themselves from rising costs. So, but hold on. But growth stocks are at an all-time high.
Yeah.
Today. And gold is getting the shit kicked out of it. So maybe we're not following the historical playbook. I mean, have we learned nothing?
So it's weird because all right. So the market is completely in denial about there being this sustained inflation issue if gold sucks and growth stocks have never been higher, right? The market is up. However, there are some people who are worried.
But what about commodities?
what about the inflation protection funds? All the ETFs that have the word inflation in them have taken in tons of money. I think they've raised a collective like $36 billion since January.
Balchunas tweeted every single ETF with the word inflation in its name, equity, bond, asset allocation, has seen inflows this year. Rare to see that kind of grassroots step. So, but it's weird. Listen, this is a fucked up market. It has been for a long time. You have gold sucking wind, you have growth stocks on fire, and you have commodities ripping, X gold, X silver. So you figure it out.
So dimensional funds is cited in the piece. They say consumer prices rose in 1998, 2001, 2008, 2014, 2015, 2018, 2020, and yet energy and commodity stocks, or energy stocks and commodities, lost money in all those years. So their quote is, these are not effective hedges against inflation. There's a big myth out there. Given the volatility, people are probably in for some very unpleasant surprises. So a lot of people have been piling into these types of stocks. Anything commodity related, especially energy, anything other than precious metals, let's say. Do we think that they think they're actually hedging inflation, or are they just hopping on a trend? Because those stocks are going up. I
don't know. The best of hedging against inflation is not to freak out and do something stupid to your portfolio.
He touches on, just to finish this up, he touches on tips, which are the obvious go-to. Basically, these are bonds without a coupon. You buy them at a discount, and then they ended up tracking the price of inflation. I'm overgeneralizing, but
no, they do have a Treasury, and they've done very well. They've done very well year to date.
No. The inflation linked. Or what is he talking about?
I don't know. Maybe he's talking. Tips have a coupon.
Tips, I bonds, and inflation protected savings bonds. So if you think about the different ways that you could protect the portfolio, there are several fixed income versions of this. There are several equity versions of this. You could do a big combination of a bunch of things and try to figure out, like, all right, now I'm fully hedged against inflation. But here's the thing. You might be unhedged against something else that might end up being the thing that happens. Yes. And you might have like hedged yourself into a situation where when the environment turns, actually you've left yourself even more susceptible. And I actually would argue that a lot of people did that in 2010 when the original predictions of this era of hyperinflation were scaring people. So this seems to me like there's more evidence of inflation right now than there was back then. But there's no evidence that it's still going to be with us 2 years from now. What do you think about that?
I think you're right. And I have nothing else to add. Let's move on.
Okay. What do you want to do first?
All right. I want to talk about AngelList had a really interesting piece that they wrote using some of their data and data from Silicon Valley Bank. And I wonder if a lot of people in the tech community are inflationistas because they're seeing inflation in everything that they're doing in terms of their lifestyle. Everything that they're buying is super expensive. All of their investing is getting more and more expensive. Series A.
So why are all these Silicon Valley guys all of a sudden hitting the alarm on inflation when for the last 5 years they've been saying no, tech is disinflationary?
Because they're buying a 2,500 square foot home in San Francisco for $11 million. Right. Because they're investing in seed rounds at $37 million and Series A at $270 million. Everything that they are touching has gone up in price exponentially.
Yeah. So they have to obviously be taking notice of that. So then the only dividing line would be like how many of them feel like it's permanent and how many of them feel like we're just at a cycle peak. The cycle will turn down and then turn back up again, et cetera.
Throw up this chart with all these pretty colors. So what we're seeing here is pre-seed, seed, Series A, B, C, D.
Okay.
So look at, and this is showing the average pre-money valuation by round. Look at seed. Look at the Series B. Look how much this has gone up just since 2020. And guess what? I doubt that 2020 was down from 2019 despite COVID.
So I don't think this is complicated. There was $5 trillion printed and thrown at the market and the economy 18 months ago. All of it is still circulating. A lot of money has been made all over the place. People are recycling that money, coming out of one thing, going into another. I don't think there are any plans to meaningfully shrink the money supply. And I think that this game can continue on for a while. It doesn't have to end just because the taper starts or just because rate hikes come into effect in mid-2022, which is the current expectation. Like, none of those things have to automatically stop this, but I think they will stop some elements of this. What do you think about that?
No, I don't think so.
You don't think any of this will stop?
No, I mean, eventually, but when you say stop, why would the taper stop private market funding?
It's not that it would stop it. It's that all of a sudden there would just be slightly less at the margin cash chasing the same investment deals. Slightly less. And at the margin is where all the action is. Look, you have people that are going to be funding deals no matter what's going on in the economy, no matter what's going on with the money supply. That's what they do. And they're never going away, and they'll never stop funding companies. Forget about that. Forget about it. The question is, at the margin, who are the people who keep sending them money? Will those checks be the same size?
Yeah, but
the margin is where all the sex is.
I don't know if venture is an at the margin business. Look at the global funding in 2021. Throw up this next chart, guys. I mean, this is nuts. If you look at 2020, 2020 was up over 2019, slightly down from 2018. But look at this. Year to date, we're basically
Michael,
double.
Where do you think the money is coming from? It's not being manufactured in the valley. It's coming from everywhere to the valley. It's coming from non-traditional sources.
So, but I think a lot of this is people who left Google and a lot of these other big tech giants are starting companies, and there is so much more opportunity. There's so many more.
I agree with you. I agree with you. So finish your thought. Where are they getting the money when they're 6 months out of Google to fund all of these companies? They're selling Google shares, which have been lifted by the $5 trillion that's been plowed into the stock, bond, and real estate market.
I think that Apple and Google is a giant piggy bank for everything else. The bubble is coming from inside the stock market.
I agree. It's funding bubbles elsewhere.
Right, exactly.
But when does it not? Because the stock market is the asset that causes the most wealth effect among the top 20% of the country. The bottom 80% of the country, it's really their home price fluctuating up or down. The top 20%, all of it is the stock market. The stock market dictates how bullish people feel. And by that measure, you have never seen an environment where people are hornier. It's never. 99 didn't last this long. This is going on year 2.
No, this is going like year 8, I feel like.
Depending on when you want to stop and start it.
Yes. I saw a tweet yesterday that the only reason why it registered with me is only because we're doing the show. Otherwise, I just wouldn't have given a second thought. It was from TechCrunch. It was from TechCrunch. Will Smith, Kevin Durant, and Sean Diddy Combs invest in electric boat startup ARK. And again, like I said, ordinarily I just keep scrolling. Yeah, doesn't register. But imagine rewinding 10 years ago and telling yourself that Will Smith and Puff Daddy are investing in an electric boat startup. You'd be like, why?
Top. Right. The blog posts write themselves. I'll do you one better. Imagine going back 30 years ago and I told you fucking Charles Barkley, right? And I don't know, Denzel Washington, and who's my comp for Diddy? Quincy Jones are funding electric boats. Imagine I told you that shit in 1991. You'd be like, wait, what is happening? So the world has permanently changed. I do not think these people, celebrities in general, are going to go away, even if there is a 1 or 2 year downturn for technology. I think this is a new permanent feature of the landscape, which means if you're using this shit as a contrary indicator, you're going to have a very painful life ahead of you, as none of these things turn out to be a good sign of the top. That's my personal opinion.
One final thing. No, eventually it'll be a top, but until then, one final thing. On AngelList, blockchain and crypto startups captured 16.6% of all deployed capital. It's a lot.
Say that one more time.
Blockchain and crypto, almost 17% of all deployed capital.
I wonder if that's because it's going up a lot. I mean, honestly, what do we expect, right? I'm almost surprised it's not 100%. I want to do this thing about RIAs and hedge funds because I genuinely don't know where you stand on this, but I'm very curious. So this comes from RIA Biz. Shout to Brooke Southall. Rowe Price becomes major hedge fund player in a heartbeat with $4.2 billion Oak Hill purchase, plus a $500 million co-investment with RIAs named as prime prospective clients. So T. Rowe Price is a very storied and well-respected asset management firm based in Baltimore. They just added $53 billion in managed capital by buying Oak Hill, which I guess is like a collection of hedge funds or a hedge fund platform or whatever. Do you think that they genuinely see RIAs as the prime prospective clients? And how successful do you think they'll be in the current environment at converting people who up until recently were like Vanguard only, iShares only?
I think they'll be quite successful because this is not my world, obviously, but Oak Hill apparently is a distressed debt player. And they're doing alternative credit, alternative lending, and they're trying to get,
I didn't know that. They don't have anything else? They're not like long, short equity, none of that?
No, it's distressed credit. So this is an interest rate story, like pure and simple. And if advisors have access to products where they can get upwards of 8 or 9% for their investors, then yeah, you better believe that they're going to be all over this.
Okay, so all right, so that's interesting. So they have a great story to tell. So assume like a lot of RIAs already have a relationship with T. Rowe Price, right? And then they're like, look, you guys are doing equities with us. You're doing traditional fixed income. You got your 60-40, whatever, your core and explore. However, we have a strategy that it costs a little bit more, but your clients are really looking for income. Mm-hmm. We can deliver that in a very diversified way that's different from what you're already doing.
Yeah, and they can say,
that's the pitch?
That's the pitch. Oak Hill's been doing this for 40 years, I'm guessing. Right? It's not crazy exotic. They're not reaching for a stupid amount of risk. Obviously, listen, if you're getting 8%, there's a material difference in risk between that and treasury bonds. But they're doing it probably in a reasonable, intelligent way. And so, yeah, clients are going to be all over that.
I wonder if it's a buyer's market, if it's a seller's market in hedge funds the way it is for so many other things. Like, do you think they're getting high multiples relative to history right now?
I think it depends on the strategy. Like, 100% depends on the strategy.
Okay, but so maybe this is an interesting way for asset managers to help their RIA clients distinguish themselves from all of the competition. Because
I don't know anything about this universe.
This part of that is
they manage $53 billion in assets. Oak Hill, they got bought for $4 billion. That doesn't sound like a lot of money.
That sounds like a little amount of money.
Yeah.
Right. That sounds like there weren't many other bidders, actually.
Right.
Okay, got it. All right. Well, I guess we'll see what ends up happening. I think they seem to have the right idea, and if it works, you could expect every asset manager to start adding these types of alts or certain types of alts to their platform. One last thing on this. So 8 to 9% for loans. Do we think that's sustainable? I mean, the cycle has been good, but
I don't know enough about this to give an intelligent answer.
Yeah, me either. We should look at that. Okay, you're up. What's up?
Okay. Did it feel like we just had an amazing month for the stock market?
Yes. Why, you didn't feel that way?
I don't know. Maybe I'm spending too much time with Shiba Inus.
Well, I mean, it's really hard to find stocks that haven't been working this month. Like, you could think of a couple off the top of your head, but like even the ones that you would think had a bad month, I don't really think had a bad month. Like Facebook, like I think it was okay. I know we're not supposed to call it that ananymore.
I saw something.
But what had a bad October?
I don't know. I saw something crazy today. I know we keep talking about it, but sorry, it's bonkers. Tesla gained almost $600 billion in market cap over the last 30 days.
Wait, 600 billion in new market cap?
Can I tell you that's like the market cap of Berkshire Hathaway?
Wait, is that possible?
Yes.
Is that really the truth?
Yeah.
So it went from 400. What is it? 1.1 trillion today.
1.2.
Is it going to overtake Amazon? Is Amazon 1.5? Could Tesla become bigger than Amazon? Is that possible?
Hold on. Let me go to Y charts. I mean, this is just so Amazon's 168. Whatever. It's just nuts. Okay. Anyway, I know. All right. So tech. So the S&P was up 7%. Tech 2.25. Discretionary.
But like Tesla is now a decent sized contributor to the S&P. And certainly the NASDAQ, but like Tesla is like, it's not a huge component, but it's going to become bigger, and it's like contributing positively to the returns, which was the opposite of what the original concern was.
Remember, it got added to the S&P and then fell like 20%, and people were up in arms
at the top. It got added to the S&P at the top, and then I don't know, tripled. What has it done? What has it done since? So I don't know what else there is to say. Listen, I look at my stocks. I have a few that are acting like shit, like PayPal, notably. CrowdStrike didn't have a good day, but it's had a good month. But honestly, like all the individual names that I own,
on fire.
Like they look sick. It's nothing to do. It's nothing to do with me. The market is doing this. But like, look at Live Nation today. Live Nation show at Citi Field this weekend. They did Thursday, Friday, Saturday night. For some reason, they didn't do Sunday this year. They had 50 Cent one night, Travis Scott another night, J. Cole. This thing was sold out. VIP, sold out. Like, that's what's going on right now, and this stock is accurately reflecting the mood of the people. People are going to shows.
In February, when Live Nation made an all-time high, I was the asshole who was like, you're telling me that this company is worth more now than it was prior to the pandemic? And that was at $78. Now it's at $1.05.
But I gave you the reason. They were able to refinance the company. They sold equity to the Saudis, I think. And they were able to refinance the company so that the balance sheet was in even better shape than in 2019 pre-pandemic. And then you have the demand come back to the extent that it has, and overflow prior demand. Everything is going to sell out this summer.
You know what was the biggest contributor to the S&P 500 over the last month in terms of gains? Not Microsoft.
Energy, right? Contributor in percent?
Yeah. What stock?
Not the best performer, but the biggest contributor?
So the S&P was up 7% in October. What gave it the most juice?
Berkshire, JP Morgan, Goldman Sachs?
Tesla.
Besides Tesla.
I'm just saying it was Tesla.
Yeah.
Tesla
was
Microsoft, NVIDIA.
I'm old enough to remember when Tesla was going to wreck the index fund.
Hilarious.
So it's funny that not only did that not happen, but actually it went the other way. I think that's pretty funny.
What are we talking about? Illuminati?
Real quick, Simon Property reported after the close. You see what's going on with this stock?
Yeah.
It's up.
That's another one.
It's another one. It goes up like crazy every day. So I don't know, like, when you're like, do you know October was the best? What'd you say? This was the best October for the market? The second best?
In like, no, in like 6 years.
The best in 6 years. Yeah, I'm seeing that every day. And I don't even own Tesla. So I only own Tesla through the indexes. All right, what are we going to say? Oh, the Illuminati is real. Why was I saying that? Oh, all right. This is funny. Bill Gates had his 66th birthday on a yacht. I know on Twitter people think he's a fucking pariah, but in real life, he's like one of the 5 richest people, and none of his friends are abandoning him. So they may not like retweet him, right? Because they're afraid of whatever, but people are still hanging hard with Bill Gates. He had a private party in a secluded Turkish cove. So did I. Mine is not till next month, though. And Jeff Bezos was on the boat with 50 other guests. I didn't know they were boys. Did you? I never seen them like photographed together or doing activities together. Have you?
I don't know anything about the relationship.
But Bezos is like a great boat hang. Because last summer he was hanging with Jamie Dimon and I forgot who else.
When I was on my honeymoon in Hawaii, I saw Paul Allen's yacht.
Oh shit.
Not a bad looking yacht.
Well, not with us any longer. Somebody in crypto probably has his yacht. Anyway, the Microsoft founder, who has an estimated net worth of 136 billion, celebrated his 66th birthday with Bezos in the Mediterranean, and guests were helicoptered from the mega yacht Lana to the secluded and picturesque cove. Oh, they get off the boat. He's renting this boat. I'm calling it a boat. He's renting this yacht for 1.8 million euros per week. That sounds about right. Why was it? Oh, so listen, every day I'm seeing pictures of like famous and rich tech people and entertainment people and bank people like broing down. And I'm not saying they're like trying to control the world or take over the weather or whatever. I'm just saying like it's now like wide open, like out in the open. Like these guys are basically like deciding what's going to happen to our lives on a very, very meta, high level. Like the gods in the clouds are battling it out for what's going to happen, and they're collaborating.
Did you read Packy's piece today?
I'm going to tell him I did, but I haven't. What was it about?
So Packy wrote a piece about Meta.
Shout out to Packy McCormick, by the way. Oh, I'm definitely going to read that.
And it was excellent, per always. And he has this really, really awesome chart that he created that shows the Web 2 value chain. And it's the aggregator in the middle with all the dollar signs. The aggregator makes all the money, and then the supplier and the consumer on the ends. The Web 3 value chain, the aggregator with a big X through it, and the supplier and the consumer get all the money. And so that's where...
For now.
No, not for now. Not for now, for tomorrow. Web3 fixes this.
You don't think there will be Web3 aggregators?
Of course there will be. But the point is, we're putting money back into the hands of the creators, out of the people in the middle.
Oh, I agree. If only this like was taking care of artists, I would be happy. You could stop right there. But I think it's going to go further than artists. I think small businesses are going to be empowered. Do you need a vaccine to get into Bill Gates' metaverse? What's the story with that? Have you heard any of the protocols yet? Or we should be okay? I'm not really sure what role each of these people are going to play in the metaverse, but I have to believe Amazon has plans to be the #1 seller of digital shit, and you can call them an aggregator. They're not going to refer to themselves that way.
By the way,
they're going to come in here guns blazing.
I'm sorry. I have no mic. You're listening to my computer mic. My volume sucks right now. I apologize. My computer's not working.
Okay. That's big, by the way.
Sorry. All right. This is a good one. This is a good one. Jack Rains had a great piece called Play Dumb, Get Rich. And the basic idea was, if you had only done the dumbest things over the last, call it, year and a half, you would have gotten very rich. And he made the point that the 5 dumbest things, and this is even debatable: GameStop, Doge, DWAC, Shiba Coin, and Ether. So he said a dead video game retailer, a digital dog currency, Trump's SPAC for his non-existent company, a meme coin of a meme coin, and a picture of A-Rock. So we spoke 5 minutes ago about...
Wait, what's the number? He calculated it. He put $100,000 into this dumb shit. You turn it into how much? 2.2 billion or something?
Too much. Too much. We spoke about this could last a lot longer, the current silliness, specifically the current funding in private markets. How much longer can this stuff last?
All right. So what was my comment? I wrote my comment in the doc so I wouldn't forget it. This is how I honestly feel. You're not hearing about the losses, or you are a little bit.
How
not
about
to the same?
Yeah, go ahead. Yeah.
No, I know the squid. We're gonna do the squid coin thing in a minute. So you're hearing a little bit about that. Was $2 million though. That's not a very impressive rug pull, to be honest. But B, this is the 9th inning. So I think Jerome Powell this week is going to make it clear what the timetable is for the tapering of buying liquid assets by the Fed. And then I think we'll be tightening by the midpoint of next year. And then I think there's a fucking avalanche. And you can keep making memes and you can keep doing the influencer thing on Instagram and screaming at people to crush it by buying all this fucking crap. But in the end, when it does end, it's going to end in like 10 minutes. You're not going to have 6 months to gradually reduce your exposure to the nonsense economy. It's going to go really, really quick. And it always, Michael, it always does. It's always staircase up, elevator down. Always, always, always. In this case, we did the elevator up. So the way down, I can only describe as like a vertical drop from the roof by your ankles. It is not going to be pleasant. So I'm comfortable saying it's the ninth inning. I do think the supply of money in the system is going to precipitate a lot of dumb shit blowing up. If I'm wrong, it won't cost me anything because I'm not shorting any of this stuff, but that's how I really feel.
Here, I understand. I won't push back too hard, but here's why I think you might be wrong. And when you say ninth inning, like give me, so when does, if you're in the ninth inning, you say the game's almost over. January?
Yeah, I think it's almost over.
January?
Yeah,
okay.
January, February.
Okay. All right, I'm going to hold you to that. Here's why I think it can last longer than that. Because all of this bullshit is starting with crypto. And it's people that have so much money that are selling 0.1 ETH and buying 1 million Shiba coin.
Totally agree.
And it's all of this crypto native money that is gaslighting the idiots who then come in. And there's so much money in the crypto universe that this can continue for so much longer than we think. And so even if the Shiba stuff comes and goes, I think there will be new manias every other week for a long time.
All right, that's fair. That's fair. I'm not saying it's the end of all manias. That's not what I'm saying. I'm saying the stuff that's going on right now is going to collapse in spectacular fashion. And like 95% of it will never come back. And 5% of it will be an incredible investment. And good luck if you think you're the person that's got a handle on what that 5% might be. I don't. You won't hear me.
No, I know. I just think
professing.
I just think as long as crypto is holding up. Now, if Bitcoin drops from 60 to 40, this will take a pause, obviously. But absent that, we will have new meme mania coins every other week.
Can I tell you another thing that I think is going to happen though too, and it hasn't yet? I think there's a possibility that Bitcoin could start becoming a source of funds for other cryptos because other cryptos start outpacing it.
That's what I'm saying.
Both in terms of adoption and in terms of price.
That's what I'm saying. That's what's happening.
Yeah. Well, so all right, let me seed this one point. We are in uncharted territory, and whatever I think I know about what has happened in past cycles may not apply, but I do think a lot of stuff is happening because it's fashionable and it's not economic, and it's people doing things that make them feel and look cool to their peers.
Oh, yeah.
And I'm not one of their peers. I'm fucking old.
Right.
So I understand. I get all of this. However, I have one benefit from having been old, which is I have seen so many versions of the same thing that it's hard to talk me out of this being just another version. And I did this on my blog this morning, and I'm not going to hash the whole thing, but just think back 17 years ago, if you were even alive. Shout out to my Gen X people. If you were even sentient, remember for some reason, inexplicably, that one summer in 2003 when every single person you knew was walking around with a yellow rubber bracelet around their wrist. Does anybody even remember what the hell that was even about? It was about Lance Armstrong having cancer and then won the Tour de France. And for whatever reason, this caught on as a fashion thing. Nobody gave a shit about his foundation. It was like, oh, everyone else has this yellow rubber bracelet. I'm going to get one too. And it went on for a while, and it disappeared just as fast. And there are so many versions of this that I just feel like should be mentioned. We had online poker. We had Taibo, Zumba, frozen yogurt. Everyone was opening a frozen yogurt store. We had people wearing their clothes backwards because of a rap group called Crisscross in 1992. I used to have 2 earrings. In 2010, motherfuckers were running around, I swear this is true, running around with Smirnoff Ice, getting down on one knee, and like if they challenged you, you had to chug a Smirnoff Ice. At the time that these things are taking place, they seem invincible.
Just keep talking.
Like this is just how it's going to be.
Just keep going.
I'm sorry. I just don't. I just don't think that there's any kind of permanence here. But I love this piece. Who wrote this? Play Dumb, Get Rich.
Jack Rains.
How do we know him? Do we know him?
I saw somebody tweet it. I don't know Jack.
Oh, okay. All right. We should talk to that guy. Anyway, that's where I am. I'm gonna stop talking now. We're gonna bring in
let's
Duncan.
go.
We're gonna do ETF flows, and then we're gonna get out of here.
Hey guys. Sorry everyone for Michael's audio troubles. We'll have that sorted out by next episode.
This guy comes on here with apologies. Duncan, everybody loves you.
I'm just
it's
stressful.
Come on, like
stressful.
Mr. Personality. God.
Okay.
Nobody's mad.
Speaking of manias, I put this in the chat. Do you remember Yo-Yo Mania? Do you remember that? All those like Iomega yo-yos and stuff.
No. What is that? What is this?
Like when
Yo-yos.
I was in like middle school, it was like all the rage. Like Michael, you have to.
What was that? 15 minutes ago?
Yo-yos?
How's this for a mania?
Yo-yo.
Rodman just texted me this. It's like a letter from the teacher. I can't read this. What is this? I can't read it. Kobe was painting his face with his yogurt today.
Is he learning that on TikTok?
She asked us to speak to him about his behavior.
Oh shit. Here we go. That's how it all starts. He's gonna be vaping next week. Are you nervous?
I am. He has all of my bad tendencies.
Dude, you should see what I have going on in my house. Don't worry about anything. All right, Duncan, what do you got?
Okay. So first up, Adam asks, do you think ETF flows really drive prices of the underlying holdings? The launch of BITO, the Bitcoin Futures ETF, appears to have been a massive success, yet the price of Bitcoin hasn't really changed meaningfully other than for maybe a few days. Maybe it's different with futures versus stocks. Can an ETF like ARK really get enough inflows that the fund buys enough of the underlying holdings to move the prices higher for more than just a few trading days?
This is a good question.
What do you think about this?
This is a good question. The answer is it can, and it depends. It depends on the size of the ETF and the underlying holdings. So, for example, I forget who did this piece, but the size of the companies that Kathy Wood used to own in ARK, her flagship fund, are like literally twice or three times as large today as they were 2 years ago. Because guess what? At $40 billion, you can't be buying companies with a market cap of $1 billion. Like you will literally move the share price. So it depends. Now, can flows into like the S&P 500 distort NVIDIA? I don't think so. Can they have some funky effects on like some of the really small companies? Yeah, I definitely think so. And if you get inclusion into the S&P 500, that's a big freaking deal. So the answer is it can. I don't know how much mental bandwidth.
But
hold on. Let's think. I don't know how much mental bandwidth.
Is they expire.
Forget about that. The question is, can flows impact prices? And the answer is absolutely they can.
Okay, but I want to add a little bit of nuance here. The example that you're giving with ARK, remember that while in the main fund, her average holding market cap has gone up out of necessity, in the side funds, like she's got 3 or 4 thematic ETFs, and those are still like getting into the nitty gritty of much smaller companies that fit the niche. Like we looked at her robotics ETF last week. I never even heard of half the companies in there.
And guess what? When a company gets added to her fund, it matters.
It's on the map. That's right.
Matters.
I agree with that. It forces people to do research on it. It generates trading activity from the market makers who are involved with the ETF. It definitely changes the conversation around a given company. I would just answer this by saying that the impact via futures funds is going to be different than the impact in investing in stocks that are in an index product because the contracts roll. So whatever money is influencing the near-term contract that happens to be what the ETF is based on, a month goes by, that contract doesn't trade anymore. So if the flows aren't still coming in, then all of that influence is gone by virtue of the fact that you have just a new options contract trading. Do you see what I'm saying there?
Yeah, the futures-based product is going to have some really funky things are going to happen. Right. So there are limitations to how many contracts you could hold and all sorts of shit that is above my pay grade. Duncan, next question.
All right, Duncan, next one. What do you got?
Okay, so next up, Chris in North Carolina writes, we all know about fintech, health tech, smart home tech, self-driving tech, and 5G tech. What do you think will be the next big thing in tech?
What did he write?
I think metaverse.
Oh, wait, what did he write?
Well, that's my note to myself.
Oh, that's you. You wrote that. You son of a bitch. What did you write?
I just wrote that Josh might mention his discussion of haptic technology on the Compound Friends last week.
No, I'm not talking about haptic anything.
Can I tell you something? I heard,
Metaverse.
Josh, I heard two things today that I heard from you for the first time, from Chris Dixon. Chris Dixon was on 2 podcasts. He was on Tim Ferriss with Naval, which is excellent, and he's also on with the Bankless guys. And he said the word haptic, which I asked you what that meant. I never heard it. And he used the word skeuomorphic like 15 times.
I am living 15 minutes in the future.
And they spoke
Even
about
right now, you haven't caught up to me.
They spoke about the origin of skeuomorphic as a term. I think it was Steve Jobs coined it.
No, I actually think it was William Shakespeare. I don't fucking know. I just know that it's very applicable to a lot of financial stuff that's moving digitally, because financial people are dinosaurs and they feel more comfortable when things look like what they always have looked like.
On this point, what Chris said, which was super interesting, is like people are thinking like me, like I'm the idiot who's thinking like, oh, imagine tickets on the blockchain. So for example, I'm going to the Knicks game tonight, but I have other tickets that I'm selling, and I'm paying StubHub literally 10% to sell my tickets. It's disgusting. So I'm thinking the blockchain fixes this. Cut out StubHub, take 2.5%, take 3%, don't take 10%. And Chris is saying, forget about that. The next big thing, it's not going to be a skeuomorphic thing like that. It's going to be something that like literally it's not even close to on our radar. Like
a paradigm shifting thing that you couldn't extrapolate anything current and arrive at that place.
Exactly.
I wouldn't fight against that. I think the next thing, I think we're overthinking this. If Facebook tells you they're going to plow $35 billion into enabling virtual meetings and experiences, that's it. So you don't need to know any more than that.
This is what I was saying to you on Friday with Dan, is that this is why it's a big deal, because they said that they're moving in, and guess what? In Packy's piece today, he talked about Apple going in. Everybody is going in now. Facebook just paved the way. Everyone's going in.
Don't you I remember people being like talking to technology companies 20 years ago, 2002 on conference calls, 2003. And like one big company said they were getting into voice over IP. They were like, that's the next. Every conference call, the analyst, like the second question, congrats on the quarter. What's your voice over IP strategy? That's how these things happen. 3 years ago, what's your blockchain strategy? So I don't think we need to overthink it. That's what I think is coming next. All right, couple of things we're going to get out of here. Number one, hit that like button for the algo. I don't ask you guys for a lot. We need this. This is important. This is how you tell YouTube that the content we're putting out there is of value, okay? Make sure you do that. Subscribe to the channel as well. We appreciate the 1,000 new subs we've brought in over the last few weeks. Keep that coming. Tell your friends about what's going on here. I would also say a couple of other things. If you haven't gotten enough tonight of financial video, check out my friends at Market Mondays. That's Earn Your Leisure, their YouTube account. My friend Ian Dunlop, they kill it every week. And they've been talking about metaverse stuff for a long time and blockchain and all this stuff. So don't miss Earn Your Leisure's channel, Market Mondays, featuring Ian Dunlop. More importantly, than anything else I want to get to here, we talked about the new show that we were launching with Ben Carlson. That'll go live on Thursday. Ben answers your topics and questions that Michael and I haven't been able to get to. Make sure you're sending us what you want to hear us talk about. AskTheCompoundShow@gmail.com. You're going to get a new Animal Spirits on Wednesday morning. You're going to get an all-new The Compound and Friends on Friday. We love you. Make sure you're sending us topics. We will see you next time. Thanks for tuning in on a Monday night. We appreciate it. Good night.
Good night.